So this name has the opportunity to make a comeback. Who I'm talking about? I'm talking about Facebook. That's what it is. That's the name, Facebook. That whole thing of the metaverse, meta, actually is not working. But the reality is Facebook, as it is right now, it has the potential to make a comeback. Now, remember, you may ask, like, okay, what's the value of Facebook? What's the value of Instagram? As far as small businesses, Facebook ads and Instagram, they are probably one of the best sources of leads. And you have to remember, if you're a small business, the way you keep the lights on is by having customers. How do you acquire customers in your area? How you kind of get the tools? They're not too complicated if you dedicate the time. Well, that's still Facebook, and Instagram does work pretty well. Now, there are changes that they're making because they kind of want to be competitive for the time being with TikTok, while they work on the next big thing that might potentially be the metaverse and all these kind of virtual real estate. But in the meantime, what we want to pay attention when we study options is exactly what is happening, and I'll always be referring to the max pain point. Now, we know everyone is bearish. There's so many charts telling you about these extreme levels about and how retail traders now are positioned. I mean, we knew the big money, the Wall Street elite has been playing to the downside aggressively, and because there are so many aggregators out there that you can kind of pinpoint what's happening, you tend to have a notion. And retail, you, and me, we do now have an opportunity. But what I do as well is we want to kind of think how we can play this and put the less amount of money, right? A lot of what happens as well is you may have an opportunity to go for a weekly call. That's a lot what retail traders do. But you always want to be smart in buying time. That's number one. You want to buy time. And also you want to see how you can leverage yourself. I mean, options by nature, it's a leveraged product, but also you want to see how you can leverage yourself if there's an outcome that has high probability to take place. So enough talking, and let's jump to the chart. So we're going to start with, of course, what's happening with the price right now. Meta platforms, Facebook, by the way, ticker META, trading at 138. If we look at the opening today, pre-market, 1.5% up. Let's put it at 140. So if the max pain is to the upside, we want to take a look at what's happening in the chart, see where's the stock trading right now. And if I look at the daily chart, this is the price behavior. We have some kind of a wedge, a technical pattern. And what I'm looking is understanding previous levels, historical levels. I'm looking for potentially at this stage, I'm just going to extend this. I'm looking for the max pain point, and that will be to the upside. To the upside on the daily chart, you do have a little bit of a gap here. So what I will be looking is either to the end and the beginning. So that sets a 17% to the upside. That sets me close to 161. I can use that to pick my strike when I'm choosing my option. And then all the way up, I'm looking at 20% move, and that will set me close to 167. Now, you have to remember one thing. If Facebook were to push higher, that doesn't mean anything. It's still bearish for 2022. So you're actually just playing bounces in the stock. So this is what we have so far. This is the idea. These levels, the 114, those are historical levels coming back to November of 2016 and all the way down to the liquidity of January of the same year, 2016, when the stock was trading at 89. You have to think that a lot of what's happening with growth, it's their PEs, they are getting adjusted, and that makes them attractive. Now, they can also become value traps. A lot of people, including myself, I think this is a value trap, but hey, you never know what's going to happen. And the most important, when you look at these from the perspective of a trader, that doesn't matter if it's a value trap. Right now, the market is pushing higher. We had a horrible month in September. So there will be some opportunities, and we're here to take advantage of them. Now, if you look at the Hawkeye Trader tools, it's not a secret. I see the same structure, and we are in a little bit of a consolidation. It consolidates. Let me just adjust this, okay? Okay, I will adjust this one, okay? It's a little bit like it's a little bit of a continuation triangle right there. It's a continuation triangle, and it looks like it might push higher now. The 2-hour chart shows how the Hawkeye heat map. It's very light green. That means potentially the trend is changing. We have nothing on the bottom. If I look to the 1 hour, it's dark green. If I look at the 30 minutes, same story. If I look at the 15 minutes, that's a little bit of the same. So you can see also there's a gap here to fill at 141. We probably will do it today. And then on the daily, it doesn't show any signs yet that that's the case. I don't know what happened with this one here. I probably have to fix it. Yeah, had the volume here. That's okay. I think that was the volume. Okay, I will fix that. Take that out for now. Okay, so it does look like it found support 134 and it's now defended 140. So the move I'm looking is all the way to this point, so I won't be very aggressive. I probably take a 17% to the upside, and that leads us to choosing the strike price. That's very important, choosing the strike price. Now, what I like to do is go back to give me some time. Don't buy in front of yourself. Try to give the trade some time. And I'm looking at the 160 based on this 17% move in the next 2 weeks. Now, remember, October 13, we do have the next CPI readings, Consumer Price Index. Now, consensus expecting 8.1. It's well known that a lot of the decisions, policies from the Federal Reserve central bank policy takes about 6 months. Now, this can be an opportunity. I'm not calling for a surprise. I'm calling just to go flat. We're not calling it to go lower, just flat. And you have to think for a second, what kind of market reaction we will see and experience if that thing comes flat. That means that probably the whole induced recession mode that the Federal Reserve has been promoting might actually be working. And flat will be something very good for the markets, and that can kind of propel Facebook to 160. Now, remember, October 26th, Wednesday after hours, we do have earnings, so that's something I have on your plate. And very important, I'm choosing this one because also I'm paying for this premium is just 61 cents last trade, so probably pay no more than 75 cents. That means $75 per contract. If you're watching this video and you want to give it a go, always remember, take one contract. You don't have to go all in. That's not the case. One thing I would like to see today, if this is the volume that happened, that took place yesterday, 5,550 contracts, I'd like this to be added. So I'm looking for 25,000 contracts in the open interest today. I will make sure to include the description of this contract and everything, all the details as well in the description of the video. And there you also will find my first webinar with Steve Place, so you can understand what I do, how I do it, and why I do it when it comes to understanding what is happening in Wall Street and how they trade options, how they are moving their risk. So that's fantastic. And this is the trade I look to go with. Now, the contract high of this one is $44. Now, I don't think it's going to make it to $44. You never know, but the probability is very low. So what I do think here is fine. Where was like 5 days ago? 5 days ago was all the way to 140. So probably I can aim to make 100% of my money. A month ago, it was trading around $6. That was around September 12th. So in the best case scenario, I can probably look into make 10 times my money. If we have a flat CPI, that will be actually something that people will see like, so wow, like the Federal Reserve did it. That probably just helped Jay Powell not to pivot. You don't have to wait for the Federal Reserve to pivot. What we have to expect is a little bit of a wording that they don't have to be as aggressive as they are thinking, all right? So just to finish my video, this actually will be the best way, I think, to place this idea. Conservative, look for 120. If you get it very close to 60, go to, on the 5-day, you're looking for 140. Like I said, if you pay 70, 75 cents, look to exit, conservative speaking, at 140. More aggressive thing goes very well. We have a flat CPI, in the month of October, that's the CPI from September, then you're looking to sell at $6, and that will potentially be a very juicy return, okay? We do know that there's some activity here. Now, the other idea that I have when it comes to pinpoint how to place money, how to place my bets when it comes to options. For example, if I think there's an opportunity to make money to the upside and I want to place a big bet, I'm talking $1,000, $5,000, I tend to buy at the money options. For example, the 143 depends how things are going to open, but let's take the same 160 or whatever we have available here. The same 160 is at the money. Okay, so the at the money will be 140, 142 where the market opens. I'll probably be buying around this area or not too far from the money. At the money, ATM, or not too far out of the money. So probably just see where the market opens today and probably take the 145 or the 140. This will be my areas. And in these cases, depending on the price of the contract, I will be looking to take 2 contracts or 4 contracts. But the idea is that you actually are buying something that is already taking place, or something, if you think about it, that wouldn't require such a big move to take place. Okay, guys, I don't want to extend myself. I went over my video, a few ideas. I want to thank you so much. And every time that you visit my channel, just remember, at the end of the day, someone always knows.